So with me, I've got Thomas Legris from BNP Paribas, Willem Middelkoop from Commodity Discovery Fund, Scott Marsh from Hawke's Point, Henry Rousseau from Investec Asset Management, and Shankan Lee from Oppenheimer Gold and Special Minerals, and also Peter Groskopf, who was meant to be with us on the first panel this morning. Peter had some issues flying in, and he's very kindly agreed to come and join us on this gold discussion here. So Peter's CEO of Sprott AM. So thank you all for joining us, and thanks for giving us your time on the panel today. So really I'd like to start just with a sort of a little overview of sort of gold having quite a stable year, growing, the price rising quite gradually towards the end of 2017. Given it's been a good year for equities globally, especially across the end of last year, have gold equities themselves met expectations or met your expectations? And perhaps, Henry, if you'd like to kick us off and we'll work our way through. Are we on?
Can everyone hear me? Excellent. I think, and the issue is exactly that investors, when they invest in gold and gold equities, they want diversification. And for us that runs a gold fund, you always got to think about physical gold versus gold equities. And where we've been disappointed in some of the gold equities is that you've seen significant risk within the equities. And specifically thinking of the regulatory risk, operational risk, and we've seen some severe hiccups last year, whether it's Acacia or Klondex or Eldorado. And I think that's the issue, that where people invest in gold as a diversifier, you don't want that stock-specific risk. And I think that puts off a lot of investors. So when we speak to large institution pension funds, effectively our clients, they often shy away from the equities specifically for this reason. I think that's perhaps also a lesson for a gold company, is to de-risk your business and make it much more beholden to the macroeconomic, the gold price, the dollar, in terms of your investment case.
And what's your view entering 2018 in terms of gold? Are you a bit more bullish now?
So we've got a pretty bullish view. I think in terms of gold price expectation, we're looking at $1,350 for the year, so slightly above where we are now. And I think the one thing to look out for is just the strong local currencies. A weak dollar is going to be a strong headwind for a lot of companies. But if you put in kind of reasonable gold price expectation, $1,350, and I've got to say, if we see significant geopolitical events, there's upside to that number. But even at the current gold price, I think there's good upside in a number of equities, and we've loaded up on equities in our portfolio, preferring that over physical at the moment.
Shankan, what's the view from Oppenheimer? Are you quite bullish? Are you in favor of equities over bullion? What's your take on this?
So actually
It's on. Can we get the mics up, please?
Can you switch mics?
Perhaps switch.
Okay.
Thanks.
Let me switch this one. Actually, last year the gold equity did pretty good. It's not that bad at all, And it has been, if you look at 2016, 2017, the number is not that bad. And I think if you're talking about the bullion, the gold price versus gold equity, it's really different products. If you really, everybody, talking about a gold fund, you simply load the bullion, hold the gold, become to relatively simple, because you only buy the macro factors. You don't need to go to the company level to do all the detailed work. So if you go to the equity, indeed, you bear much more risk. At the same time, if you buy it right, I'm saying you buy it right, so the return should be much better than you hold the bullion. There's no question about it. Talking about the gold price, a lot of people try to forecast the gold price. I thought that's a very tough job. It's so difficult to make it right. However, there's some clue, according to history, at least the last 15 years. If you really trade the bullion, probably 70% of the bullion movement could be interpreted by the dollar price. If you really see the dollar going up, So bullion probably going down. There's no question about it. So that's always the case. I'm talking about the short-term trading. If you really look at the long term, that's a different story. The dollar has been weak over, let's say, 50 years. If you look at the picture like that, that's probably cannot give you very good guidance to trade gold. However, the equity side is different. Equity side is, there's so many very good names. If over 20 years performed extremely good, if you load the equity, stay with it for over a long-term period of time, your return should be really good. Although those kind of names, not a lot. For the 2018, I think a little bit tough to play out. The reason is so very controversial about the gold price. There are a lot of people like the current situation saying the gold probably not worth to put some money there. The reason is U.S. dollar probably stronger, U.S. economy pretty good, worldwide financial system seems no any trouble at all. So that's one side of the argument. Another side is saying, well, may not be the case. How about the U.S., politically speaking, there's something wrong? Maybe, let's say, Trump out of office, possible. Or there's some certain kind of special case or special situation can make the gold a big jump. So I thought this kind of argument probably will continue for the 2018. It's not simply one event disappeared, say, okay, gold price is settled. I think through the entire 2018, probably the arguments will continue. That's my basic, I don't know, is
Fair enough.
right or wrong, yeah.
No, indeed. Peter, are you as focused on price at the moment? Are you concerned about these sort of discrepancies continuing over that, or are you focusing more on other fundamentals of the companies that you're looking at investing in?
We think gold equities are relatively cheap at the present time. Bullion itself has had a fairly good price performance over the last 2 years, and equities have been left behind. Largely explained, I think, by the differences in funds flows in our sector. Passive funds being directed only into the most liquid names, and gold funds not having performed well enough to capture the imagination of the high volatility investor set. Those investors have largely gone to cryptocurrencies and other areas, and gold funds as a result have not been very popular.
Yep.
So I think a lot of gold equities suffer from illiquidity, as was mentioned earlier, a lot of company specific risk. So if they miss something or a project gets delayed, the result is a fairly swift decline, and a lot of names don't have any liquidity at all. So it's not an easy sector, and and as a result, there's lots of good buys.
Okay, interesting. And Thomas, I'd like to come down to you. Could you add to that from a banking perspective? Is there still a lot of caution in terms of lending perspective, and what's driving that?
Thank you. I think the gold price is definitely not driving our mandate at BNP Paribas. I'm on the senior debt part of the business. Having said that, two comments probably. We do have our internal price deck that we use for debt sizing exercise when we look at new deals. And it's, I can say that we have revised upwards a bit our internal price deck. So there is a feel within the top management and the risk chain of the bank that yes, the cycle is back, and we keen to probably put more debt or leverage a bit more these assets. A comment as well on the relationship between the equity market and the debt market. I think we really have to realize that we are in the same boat. The volatility is very good on the equity side, but the bad buzz are very bad for the bank. My credit committee is looking at some of the equity stories with the gold stock going to the roof, and then everything disappears. In terms of credibility for the sector, that creates buy noises internally, and my credit committee will ask me the question: okay, what happened to that company? What's the reason for that rally on the gold on the stock? And are you sure that that other company won't have the same future? So volatility is good. There's been a couple of bad examples. You mentioned Tanzania was a tough sale internally to explain the reason for what happened in the country. But we're quite keen to do more deals. I can say today that we have the mandate to probably be a bit more aggressive on the final takes. We have the expertise in junior mining, construction risk, development risk. The good thing with the gold projects, they are pretty small, or smaller at least than the big copper or bulk projects, which is quite nice when you look at deals in West Africa, for instance. You have less need for infrastructure. Part of the capex is quite limited. So yes, we're looking for deals. There are not that many. We need to team up with the equity market to make sure we align our criteria. I'm sure everyone will say that management team is key. You want to start small, nice, and deliver quickly. But we want to avoid having the bad buzz that we had in the past where we have a company trying to put a project in development for 10 years and nothing happened. That's not really helping our credit committee.
Okay, so slightly more optimistic outlook than the last couple of years, perhaps.
Definitely, yes.
For the right project.
Yes.
Excellent. Willem, what's your view, and take us through a little bit of what you're focusing on with Commodity Discovery Fund at the moment?
Yeah, and our fund, which started 10 years ago, is called Commodity Discovery Fund. So we specialize on discoveries, and we always focused on the North American markets or North American place. But last year, of course, we had the interesting situation in the Pilbara in Australia, northwestern Australia, where you have the gold-bearing conglomerates. First there was a gold rush, and now everybody's out again. But we visited the Pilbara 3 times. Our geologists went there 2 times. Discovery is for real. There's a lot of gold there. It's very hard with the traditional techniques of drilling to prove how much gold is there. But I think by doing large bulk samples, companies like Novo and Artemis will prove this year that this is a major discovery. And especially in Western Africa, we see some new gold discoveries finally. West African mines, Oklo Resources. So there are a few new discoveries, and they always tend to outperform the more general gold equities. But I would like to make a point, the last point on the gold equities. They have been underperforming gold for the last 10 years. So if you take the ratio, you see a downtrend in the last 10 years, and we are about to break out of this downtrend. So I think gold will improve, the gold price will improve, go north of 1400. Then the profits will become so interesting that finally the gold equities will break out of this downtrend, and then finally more money will flow to the sector.
Excellent. And why do you think we're breaking out of this downtrend? Is it because gold miners have consolidated, the exploration appetite's picking up a little bit?
Well, the gold miners, they made many mistakes in the last 10, 15 years. Dilution, we saw a lot of dilution in the sector. I think the cost price came way down. You will see less dilution, so I think the profits per share will really start to increase. And the sector is so out of favor now. And you always see markets turning when everybody is negative about the sector. And look at panels like this, there's hardly anybody interested. And there's always I always like to talk for rooms where there's only there are only few people, because that's typical. It signals a market bottom.
Market bottom. Okay. And opportunities ahead. Fantastic. Okay. So Scott, could you give us your view from the private equity side? And also, I'd like to lead into perhaps more focus on what sort of characteristics you guys, investors, are looking for in the mining companies that we have here today, or in general. And maybe there's a jurisdictional interest for you as well.
Okay. Well, I'll preface my answer by highlighting that we are a private equity fund. We have a long-term view. We have a 5 to 10 year view. We focus very much on, we're less interested in the sort of day-to-day volatility of a stock. We think that a lot of value is made and destroyed, and touching on Willem's point just now, it's made and destroyed based on governance. And I think that the industry hasn't showered itself in any glory in the last 10 or 15 years. I think there's been a lot of management teams, and I talk about boards, chairman down, they set the culture of a company. And if you don't have good governance, and if you don't stick to your knitting, you're going to destroy value. And one of our biggest peeves as an investor, as a long-term investor, we're not guys who are going to get in today and be sold out in 6 months, 12 months. We have 5 to 10 year horizon. We'd like to see ourselves going through the cycles in the market, but it is all about governance. And if the sector became more professional, if the sector were more receptive to what the market is looking for, if the sector was more honest with itself about governance, then I think we would find that there would be more appetite into this sector. There are too many times that companies have failed, and I can speak from a professional and a personal perspective. Every time I've lost money, it's due to governance. It's due to decisions made at the board level that could have been avoided.
And sort of the decisions we're talking about being more cost-conscious, conservative with budgets?
No, I would say fundamentally decisions are made because of competing agendas. Maybe people are spread too many board seats with other companies, conflicts of interest with other companies they're involved in. Maybe some investors have got too much stake in a company and they make decisions based on their personal view rather than what's best for shareholders. It's things like that that really need to be cleaned up. And it's something that's going to take a while. Whether it happens, I don't know, but we are patient investors. We're lucky if we do a deal a year, because we're the type of guys that we want to make sure that we're investing in the right team with the right governance that have a long-term view. We're not interested in the volatility. Mm-hmm. And yes, there are short-term traders who want to do that. That's fine, that's up to them. But we feel if we can find a company with good governance, good management, with underlying sound assets, then we're in there.
Fantastic. And any particular jurisdictions for your focus, or are you pretty
No,
global?
we're sort of jurisdiction agnostic. It comes down to the opportunity that is in front of us. It's the risk reward that we look at. And really, it's how the management can navigate the jurisdiction. If they're inexperienced in a jurisdiction, we're likely to stay away. If they're well experienced, well established, have got good relationships within that jurisdiction, and there's a precedent that they have been able to manage that, then we will look at that closely.
Excellent, great. So I want to sort of touch on where some of the points that you've all raised that were perhaps nearing bottom for equities, or it looks like there's a lot of opportunity ahead for the right kind of project in the exploration space. Are we now entering an exploration-led period for gold markets in general? Hanray, do you have any comments on that?
Yeah, I think actually we're in the early stage of the exploration cycle. I think we need to see a little bit more confidence returning to mining companies. The reality, though, if I look at the large cap gold miners, they're all struggling with declining profiles. So I think in a sense, certainly they will drive a big boom as well. But what I'm hoping to see is more of M&A-led growth. And I think the large cap gold companies need to recognise that they're perhaps not that great at exploring, and you've got to trust the juniors to do the groundwork. I had a boss that used to say that geologists should be paid to find gold and not to look for it. And I think very typically, and I'm going to step on some toes, but geologists that works in the large caps, they very happily take their salary check and look for stuff. And I think there it makes sense for a large cap then to find the right partner. And there's a lot of examples of that in the industry, and invest in growth in that way. And I think that's where, as investors, they talk about the confidence returning to the sector. There needs to be a re-rating, because there's been a massive de-rating of the gold equities because investors don't trust the management teams, whether it's governance issues, not returning cash to shareholders. So it's got to go along with bigger cash returns to investors, and then more specific targeted investment in your future.
Fantastic. And you mentioned M&A just at the beginning. You want to see more of that? Do you think there's going to be more M&A across 2018?
Definitely so, and we've already seen signs of that. I think it's got to be sensible though, and that's where one needs to focus on regional synergies, tangible synergies. I think the worst deals are the strategic deals, and typically company A is a single asset, single country exposed, and he wants to diversify holdings and therefore buys company B with the exact same profile. Those sort of deals never seem to work. I think where there's tangible synergies, go for it.
Shankan, do you have a view on sort of replacing mined ounces through pure exploration plays or M&A? Do you think the industry's been a bit too scarred by M&A in the last few years, that people need to be very cautious again?
Yeah, I think you have to really recall the history. Last 5 years, I think the gold really into the relatively bear market for almost 3 to 5 years. All the larger names, they simply cut the budget, save the assets, cut the budget, pretty much cut the exploration. So this industry actually last few years is really underexplored. So you can see it. Even this relatively early stage company, exploration company, really need money to do more exploration. However, you cannot really have the money to do the work. Larger companies not buy the assets, simply sell the assets. So that's why this industry, the cycle need to come back. Come back, there's 2 factors drive it. Number 1 is the gold price need higher. Number 2 is the big names, big companies really urgent need to increase their reserve resources. Think a little bit, a big company every year, if you produce 5 ounces of gold, how much money you put in to really replace your reserve resources? It's hard. At some point, you have to really buy those kind of early stage company. Those kind of cycle, we saw it before, but it's not coming yet. At some point, I think the cycle should come back.
Okay. Thomas, what's your take on the M&A side of things? Obviously, you want to see more deals and transactions coming through, but what's your view on it across this year?
Being on the private side alongside the companies, it's fair to say that all of our clients are asking us to assess their debt capacity on making sure they have the ammunition available to do big deals. So they are getting prepared in terms of making sure if they push the button, they can deliver. There's been a lot of talk, not a lot of deals being done. We know that some of the assets have been on sale for a few years, and probably the pricing expectation is very high because these guys have been working on the asset for a long time, and they want to make a good price out of it. So they are working on it, yes. The clients are working on getting prepared, either to be the first one to put a proposal, or just to be prepared to move if someone is moving alongside themselves. I'm ready to bet that there are going to be deals being done this year in Côte d'Ivoire, Burkina, and Mali. And that's where we see most of the talks at the moment. It's kind of a new frontier for some of the big players. It's Francophone Africa. They are not used to the tax legal environment. So some of the names, for instance, very keen on Ghana, will be a bit reluctant just to cross the Volta River and go in Burkina Faso. It's the same geology, but so yes, Francophone Africa, these countries, Burkina Faso has been on top of the list for a long time. We see a good momentum on Côte d'Ivoire at the moment before the elections to come in a few years' time. Mali is sometimes a bit more tricky because the perception from a political risk is high, still high. So yes, companies are getting prepared. On the other side, on the exploration part of the business, we see more and more waiver requests from the companies to make sure they can use excess cash or reinvest the cash in exploration, in regional exploration around the properties. And if you look at the budget that has been announced on the screen over the last speakers, some of the companies are really increasing their exploration budget. And they believe that they have to do it because that's how they create value, probably.
Fantastic. Yeah. Willem, I'd just like to ask you, do you see Junior's experience being the segment of the market where there's going to be the big returns across this year or in the short run? And what are your views there?
Yeah, but you need to be very selective by choosing which juniors to invest in. So our only criterion is the size of the discovery. We can even live with mediocre management because there's so many examples in history where a world-class discovery was done by bad management, but they will be taken out. So it's very hard for juniors without a good discovery to get financing, but maybe they can be helped in the end because we are of the opinion that there will be a revaluation of gold, a major revaluation of gold, or through the market or through central bank decisions. I'm a student of monetary history. I wrote a book a few years ago called The Big Reset, that we need a monetary reset. If you study the past, the gold price always followed the amount of money being created. But this revaluation of gold, which occurred in the 1930s and which occurred in the late 60s, early 70s, it always occurs in strong jumps within a few years. And I think we're on the verge of such a revaluation. And people talk too much about the trees and they forget about the forest in this industry.
That's a good point, yes. And this sort of leads me on to a slightly alternative point that I wanted to raise with you, Peter, about maybe the evolution of gold or where you think the future of gold lies. And I know you've been working on an exciting digitization project with Sprott. Could you just tell us a little bit about that?
Sure. Yeah, I think this is going to be the big story of 2018 and beyond in our sector, is that gold will be put on the digital ledger. It'll be put on the digital ledger by the mints around the world and by the LBMA and by the big commercial banks, and it is coming for sure. And when that happens, it will fulfill a more useful role as a cash-based cash account type allocation. So it'll capture the interest of the millennials that so far have not come into the gold market, and capture the interest that the cryptocurrencies have developed, which are attempting to do really the same thing as gold in the end, which is, to properly value a currency without risk of indefinite printing. So this is going to happen. I think it's going to be very important for gold. I also think it's going to be important for gold equities because it's going to bring interest back into the sector, and I think it's going to be a story that will be breaking during 2018 and provide a positive backdrop to the sector.
Excellent, that's good. It'll be great to see sort of a harmonization of this Bitcoin and gold debate rather than a constant clash that's been talked about quite a lot. That we've got 2.5 minutes left, but I'd like to open the floor to any questions if anyone's got anything pressing for our panelists while we've got everyone up here. Are there any questions here? No? No questions so far? Okay, well, look, I'd like to work our way down as we sort of sum up now. We've got a lot of gold miners here over the 2 days, a lot of people taking meetings and presenting. If we had a sort of a key message, as it were, for the gold miners on what they should be focusing on in the short to mid-term here, and I'd just like to get your sort of 1 minute, 30-second take on that, just working down. So, Thomas?
Quite easy to think. First of all, keep your strategy constant, even though the gold price may rise. Keep a clean strategy and don't change it every year. That's one. And second, when you're ready to develop your project, make sure you don't add too much sophistication to something that's already quite complex. Sometimes we see junior mining companies embarking in a very fancy, sophisticated financing, streaming, royalties / off-takes structures. I'm not sure that's the best way to keep it simple.
Yep, very good. William?
Yeah, it's a difficult question. I'd like to touch on another point because we only talk gold in these conferences. Nobody's talking about silver anymore. There are no silver companies anymore. There are no silver discoveries anymore. We need silver as a commodity for all kind of technical revolutions. I think silver will surprise, one day silver will surprise every investor because there will be a shortage in silver and there won't be any silver around. And and the few silver equities or silver projects will really, really jump in value.
Great. So maybe next year we'll evolve this to a precious metals panel rather than just go. Scott.
For this, the question was what for companies to focus on.
Yeah, if you have a succinct message for them.
Yeah, it's quite simple. Stay focused, stay credible, stay honest. Don't get distracted, and do the work well, be it the technical discipline, but as well as the management discipline. Again, it comes back to the corporate, so the governance issue for the long term. So it's just about doing what you do well with credibility. If you don't do it with credibility, our industry gets trashed.
Indeed. Henry, anything quick?
Perhaps not much to add. I think what Scott and Thomas said, stick to your knitting in a sense, that focus. Don't jump around. I think investors want confidence, and the only way they're going to get that is not being surprised by sudden strategic shifts or moves in a different direction that you expected.
Fantastic. Guys, if you just have 10
Yeah.
seconds, just to
Okay,
wrap us up.
so very quick. Good discoveries always worth a lot of money. However, do not let the market over-anticipate your result. Your stock should be severely penalized if anything little bit fall short.
I would say focus on delivering technically competent projects because there are a shortage of those, and those will always be properly valued.
Fantastic. There you have it. So I'd like to give a quick round of applause to our panelists for today.